Let me welcome in Peter McGuire as well as Manish Singh joining us on the show today. Peter, let me start off with you. You know, we've been touching base with you on these crude prices, but they seem to be really causing havoc when it comes to markets. India particularly, given the high importer it is definitely seeing that pressure on the back of uncertainty there. What's your current assessment of the situation?
Well, I mean, it's quite fascinating how it's played out over the last matter of, say, 48 hours. It's hard to put a fair temper to what we've experienced and what we've seen over those moving, hour-to-hour fluctuations. The market has taken on board and what we saw in New York really highlighted that. We've seen a little bit of profit taking during today, but the uncertainty, and that's the great challenge moving forward. Where does this take so many different components? The IPO from Saudi Aramco, what's happening as far as are there going to be repeated strikes? What does President Trump do? And as far as the supply side, are they actually able to get back online? And there was they were saying we'd be able to do it in 5 days. So they're just some of those little moving parts that need to be digested to the market.
Manish, what's your reading of the situation? I mean, how much trouble are we in for here? Because, we've already seen markets dealing with several moving factors, and this has definitely come as a shock.
Oh, hi, good afternoon. Yes, so my initial thoughts is that we have seen the initial bounce in oil price come down. There are a few things to bear in mind. Initially, the Saudi officials said that the supply could be restored within a matter of days. Now that has changed. It could take weeks and months. So that's the risk factor. The other risk factor to bear in mind is that what if there was another attack and whether they can defend that. So those are other risk factors to bear in mind. But overall, what one has to bear in mind that if you look at the oil production, let's just take the U.S. number. U.S. was producing 5 million barrels per day maybe 10 years ago. And now they produce 12 million barrels or 13 million barrels per day. Oil price then was $60. Oil price still is $60. So what has happened is that a lot of capital has gone into oil exploration and striking oil, and that has really maintained the prices because there has been excess supply. And not long ago, we were talking about oil prices drifting lower and lower. So are we really in for a supply shock? We'll have to wait and see. I mean, it depends on how much disruption or how long this disruption is going to be. And if there are going to be more attacks, then obviously one has to worry. Now, the president is very clear that if there is an oil supply shock and that cannot be met by new supply, then you will have a recession because the input cost, energy input cost in most of the industries accounts for at least 20% of the input cost. So that's a very significant number. If you see suddenly oil price jumps from $60 to $7 or $80, then that is a big problem. But we have been reassured by U.S. President and by Saudi officials that are doing everything to get the supply in and meet the current demand from reserves that they hold. So far, I think it looks okay. But it totally depends on what happens next, and we have no clue on that, how long the disruption is going to be or if there's going to be any more new disruption. But is there enough supply? I think supply-wise, I am not as much concerned as one would be, given how much has gone into the whole energy sector exploration and striking oil.
Right. Peter, just to stretch that point a bit further, what kind of a threat is this for India? Because, analysts believe that we should just, sort of prepare our contingency plans. We could see crude oil prices flare up to a point that would then be difficult for India to manage, although you have the oil minister who seems to alleviate those concerns. But how much of a threat or a concern could that be?
Well, we know, you're importing 500,000 barrels a day, 500,000. It's a very large number. Does Saudi, and we understand as far as they don't feel as though that there's going to be any real issue as far as meeting the market. But how long is this particular facility going to be non-operational? That's the great challenge. Is it going to be days, weeks, or months? And are we going to see, as my other guests highlighted, are there going to be further attacks? That's the great unknown. So I don't think this could play for a long-term game. And where it runs at the moment, you only got to look at other geopolitical tensions or weather outages coming into the States which could greatly impact global supply, which in turn naturally will affect India. So, yes, the unknowns are there, and I think at the present time, you'd have to say probably crude should be a couple of dollars higher than what it is at the moment.
Sure. Okay, Chakri, how worried would you be about the oil import bill, especially at a time when tax revenues are falling, divestment is slow, we're already coping with a slowdown?
In the last 2 days, oil prices have gone up 15%, and that's not yet translated at the prices at the pump. All the refiners have not yet increased the prices, so they work on a 2-week or a few-week window. They take the average price. So over the next couple of weeks, it depends upon where the oil kinds of comes to a level. But it's clear that oil is unlikely to go back to 60 where it was a few days ago. So yes, it is going to impact in terms of higher oil prices unless the government steps as the refiners to absorb some of the short-term spike in oil, which will be for the larger good.
Moving on then, Chakri, do you think then India will be able to successfully offset the supply loss with the help of US supplies and Rosneft, etc.?
I think offsetting supplies shouldn't be an issue. India would be able to replace the crude, but I think it would be at a higher price. So that would be some amount of absorption by the government of India of the increase in the price of oil that it buys it. But it's a question of whether how much it will be passed on, because a 15% rise in oil price passed on to a consumer or a corporate or to an industrial use will kind of dent the outlook for the Indian economy. So I don't think much of that will happen. Probably they'll pass on some and keep and absorb some of the losses.
Okay, sure. Peter, how do you also see this playing out in terms of global dynamics? Let's talk about that. We have, as we were just talking about, the US saying that it's going to shore up things with the supplies that it has. We have other markets as well that have not been impacted, that the world could move towards. So how do you see global dynamics playing out?
Well, there are so many, again, those different components and moving parts that are added into the equation. Whilst we take on board that if this is the only event, then the market may be able to move forward from here and there's not going to be too much of a price catastrophe. But if you see additional strikes, if you see other geopolitical tensions rise, and then what happens as far as President Trump's rhetoric, and is there going to be a retaliation from Saudi to the Houthis? Is there going to be a retaliation from President Trump to Iran or the Saudis? All of those measures can really dictate a changing environment. We understand that we've got a slowing global economy. We understand the weakness and the fragility of the market. We've got Brexit fears. We've got all sorts of major concerns globally. And they're the great challenges that every, I suppose, major government across the world is conscious of. Record low interest rates. So it's certainly a time that one needs to be very conscious of. And the how that plays out over the next matter of months could be, oil prices are $15, $20 higher from where they are at the moment. Don't be surprised if you get major input from other moving parts to add fuel to the fire.
Manish, same question to you. In terms of really how you see this playing out more on a global level as well. Remember, we have already been reeling, as Peter just alluded to, the trade wars, the slowdown. We're watching out for the Fed move this week. Does this throw a bigger spanner in the works?
So yes, we have a lot of risk factors weighing on. So long as you do not see the oil price staying elevated, I think we can tide this over, because I have a belief that it's not a supply problem. There's plenty of supply of oil. It'll be a price problem. So if the price stays elevated, because the market perception changes about what's happening, either in reality or in perception, then that creates a trouble, because, of course, energy prices and energy costs are very important. So things could, I don't want to prejudge it, but I think things could get really worse very fast if we have surprises over the next few days. It doesn't seem like we are headed in that direction so far, but here we're talking about energy and geopolitics, and it's very difficult to forecast how they pan out. So long as the prices don't stay elevated, I think we'll be fine because we are anyway looking at very moderate GDP growth. So you do not have the same inflationary demand that we had before, and rather central banks are all in easing mode, trying to get back growth and get some inflation going so they don't have to deal with the disinflation problem. So it might be partly solving that issue, but if it goes too high, then it becomes a problem. At this moment, I am still very sanguine. I think that it looks okay so far, but as I keep saying, this is energy. Things can get very bad very fast. So for me, it's difficult to forecast, but so far, things seem under control from what we see.
Stay on with us, Manish, as well as Chakri and Peter. Lots more to chat about, but let's also hear it then from Jonathan Bharat, Chief Investment Officer at Probus Securities. He gave his view on how this volatile situation with crude is going to impact the global markets, as well as what the opinion is at a time when the geopolitical situation as well is high and there's a tight supply. Crude oil prices could potentially remain elevated for some more time, is what he believes.
I think at the moment we've already seen the impact, obviously, with that move we had overnight. The market's still a little bit unsure as to what the next play will be, and I think that'll keep prices a little bit better bid. Yes, there is a concern in getting supply to the market. That should keep prices firm. My major concern at the moment is what is the next move? What will the US do? What will Saudi do? And how will Iran react to what they do? So in my mind, still quite a fluid moment, but I think that will keep prices relatively well bid from here. The situation calms, more supply. We do know more supply is coming on the market, obviously, with what the US is doing. I get a sense that it is all about that geopolitical situation at the moment. And if the geopoliticals will dictate it, then prices will remain firm. We are seeing more supply. If the economies look to be slowing down, then you'll see commodity prices in general start to come off the boil, and that's why we saw oil. So this geopolitical move has heightened the fact that supply is an issue, and as a result of that, prices are a little bit firm. So in my mind, we really have to wait and see what unfolds. My view is that if we don't see any rhetoric that comes out to resolve the problem, then tensions will remain.
All right, let's get a move on then. And Chakri, right from the IEA to OPEC, all had forecast the weak oil demand for the rest of 2019 as well. With this event, how do the dynamics change, or is it too little a quantum to really switch the labeling of the market from glut to deficient?
I think it's unlikely that there'll be any deficiency, because what has gone out of supply is about 5%. That will largely be replaced from other sources, other countries, and also from their inventory. So from that perspective, you're fine, I think, but there will be some amount of price hike in the fuel cost for end consumers and as well as for corporate India in the short term, which might dampen the current quarter margins.
Okay, so Peter, let's get some closing comments from you then on the situation. I know you've sort of analyzed to us the current scenario, but let's paint a picture. Worst case, best case. I think we're looking more at the worst case right now, as markets just want to be aware of the risks currently. But just closing comments from you.
Well, worst case would be, I suppose, an escalation in Middle East geopolitics, and something that no one really can forecast. So some sort of retaliatory action from Saudi or the US to Iran or the Houthis, and then it ratchets up from there, coupled with rolling hurricanes into the Gulf of Mexico region. So you get a double whammy. They're the sort of things that can happen to really exacerbate or really drive prices higher. If those sort of things don't happen, but the issue also is how long is it going to be for Saudis to actually get this production back online? And that talk yesterday was 5 days. It might be 5 weeks or closer to 5 months. So no one really understands that. So they're the great issues that I think are going to play out, and it may not be a problem at the moment as far as from a supply side. But let's go down the road 2 weeks' time or 3 weeks' time and they're not back online, then you could see prices really start to escalate.
Manish, what's the sense that you're getting as well as we're wrapping up this discussion as to how dire the situation could really be, with the fears that it could take weeks or even months before majority of the output is really restored at the plant? Peter, I know you flagged off, when we could see some sort of, what the outlook is, but how much of a threat as well is it that the fact that Russia has warned against that hasty reaction as well, and in the backdrop of these escalated US-Iran tensions?
Well, yes, naturally, as far as, the Iran-Russia relationship, as we understand, is fairly solid. But then again, you've also got a very, very strong relationship between MBS and Putin. So, whilst you've got either side, you've got OPEC plus, you've got the framework there is there are so many, again, moving parts to this whole equation. From a geopolitical side, you've got where does Putin play into it? Does Trump try and create something out of this? You've got to see what happens as far as US politics. This is all, again, an unknown situation. We haven't been down this road for many, many years. And I suppose if anything to the contrary was going to happen, if there is another attack on some more fields. So that's an unknown, and that's where we've got to live through over the next matter of days and weeks. So views and relationships can quickly turn in a matter of hours.
Situation indeed, and a lot hinging on what could potentially happen with these relationships with the countries. Peter, Chakri, as well as Manish, pleasure having you with us on board. Thanks much for taking time out and joining in right here on our special show assessing the impact of crude oil prices on the boil. Thanks for watching.